Our guest says AI is still the #1 topic with a lot of clients. We're joined by Grant White, portfolio manager and investment advisor at Endeavour Wealth Management. Grant, great to see you.
Hey, great to see you too, Andy. Happy New Year.
Happy New Year to you. So the clients, when you talk to them, AI is top of mind for many of them?
You know, it's funny. I wonder if it's just people are just becoming numb to the geopolitical stories that are going on out there, because it's pretty constant these days. But yeah, I mean, I think still the conversations are largely around AI, and a lot of that is market driven. I mean, what we've seen in the last couple of years, obviously, has been driven by the AI the AI story and the theme, and that has continued on. And so I think that's still very top of mind for people as they're considering more valuations than anything else and wondering, what comes next. And so although the geopolitical risks I think are certainly there, and we're going to see volatility this year, it's certainly something that we're following very closely. The questions we get a lot still around are job displacement, and what does this mean for certain companies, and what does this mean if certain companies don't do as well as they have in the past, and so on and so forth. So I still think that's very top of mind, which somewhat makes sense given what we've seen in the last year to 2 years.
And what do clients say? I mean, I presume some of them have made lots of money on these AI stocks. Are they saying, Grant, should I get off the roller coaster now?
Yeah, well, it's certainly that is like, can we keep this going? Is this going to continue on? Grant, you've been a genius over the last couple of years. Are we still a genius going forward? You're right. I mean, certainly is a lot of that is like, how long can this go? We're at record highs, or is this a bubble? Is what does this mean? And a lot of the conversation we have around that relates to diversity in the portfolios. I think that's that's something you need to be very strong on today. Is that one, I think holding quality names in a diversified portfolio is going to be really important in 2026. But I also think you're going to have to look for the names that are lesser known out there in order to get good returns this year. I mean, I think the easy money's been made. I think it's going to be a lot harder for the big names that we've seen perform very well, the Amazons, the Alphabets of the world, to continue to perform at the high rate that they have or just on a share price basis. And so I think you're gonna have to look for the lesser known names in a year like 2026 and see where you can find that growth going forward.
You have some stock ideas for us that you say are value oriented. Start off with Mercado Libre, which I believe is an Amazon, the Amazon of Latin America.
Yeah, that's correct. So Mercado Libre is it's just a fantastic business. And I think if you like Amazon, if you love Amazon, you should really like a Mercado Libre, because it's a very similar business. Now, the difference is they're based out of Latin America, and they have all of the infrastructure built out. So, and Amazon would love to come into the places that they operate, but it's very hard. I mean, there's a lot of moats built and fences built up, and they're not going to be able to, I mean, Mercado Libre is established. So for all the reasons that you like an Amazon, you like a Mercado Libre, but you like them even more because from a pricing perspective, they're just that much better off. They don't have the same expectations that have been built into it like Amazon has, and so you can get it. I don't know if a value is a correct way to say like they're a pure value stock. I don't think that's the case, but they are value at a reasonable price, or a growth at a reasonable price, I should say. They're a high growth company, looking at annual revenue growth over 25 to 30% per year. And so we expect that this company is going to produce, 50 to 60% in overall gains in the next few years for us. And I think that, based on what we're seeing from them, that's a very likely scenario.
You have a New York listed company, CNX Resources. What has caught your eye there?
Yeah, this is, again, on the AI theme. I mean, energy is obviously one of the big conversations we have on a regular basis with clients, actually. And so CNX Resources is a very interesting company to us because, again, it's a lesser known name out there. One of the things that I love about this company is, their management. Their market position is also fantastic. They're more of a midstream. They control like the early and midstream of the energy production. They're located in Pennsylvania, and so they've got their geographic location is actually really strong, really perfect for this. And they've shown that they can manage through price pricing issues, and still generate strong free cash flow. And I think they've got 23 straight quarters of free cash flow growth going on right now. So overall, the company is very strong. Management's been very strong. Again, I just expect that they're going to be able to continue to do well as energy demand continues to increase. And especially on the natural gas side, I think CNX is going to do very, very well.
And finally, a Toronto-listed name, Cipher Pharmaceuticals. Their specialty is niche drugs. What draws you to this one?
So Cipher is just, again, on the theme of looking for lesser known companies that you can find great value in, Cipher is a really good example of this, because out of all the pharmaceutical companies, you're looking for, like, people would be aware of, Cipher's usually not on that, on a big list. And part of the reason is they're not focused in on the big drugs that everybody else is, like, that this you'd see commercials for. I mean, this isn't a company that's going to be producing like an Ozempic or something like that. They don't get into the mud of like trying to, of funding big research budgets and so on. What they're very, very good at is identifying niche drugs around things like, like skincare and acne and things like that, that are in high need, but just not high priority on the big list of drugs. And so they're able to squeeze out very nice margins on higher volume products that are just lesser known. They're also very good at structuring. So for example, they're very interested, rather than getting into research projects, they're more interested in buying up something where they can license it out to American companies, and those American companies can then go and sell it for them. So they're just essentially clipping the margin in those types of deals. So overall, I'd say, again, this is more of a very strong play from a strong management team. They've been very good at this for a long time. And if you're looking for a good company that's somewhat lesser known, you can find good value. And I think Cipher is a very, very strong company in that space. And again, good, strong year-over-year revenue growth, and we expect that we're going to see a 40 to 60% share price appreciation sometime in the next 5 or 6 years, perhaps, on that one.
Grant, thank you very much indeed.
My pleasure, Andy. Always a pleasure.
Grant White, portfolio manager and investment advisor at Endeavour Wealth Management.